This is ShadowQuant, Stocks, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Wednesday, June 10, 2026, and this is the New York pre-market. Now, let's get into it. Bitcoin just broke below 65,000 for the first time in 2 weeks, but the real story is the S&P 500 underperforming its 10-day range while gold climbs. The yield curve is flat, the VIX is under 19, and the market is waiting for the Fed to confirm if rate cuts are still in play. This is the Equities edition. Let's dive in. Let's start with the recap. Pulse, your call on QQQ was bearish, target 685, but the market closed at 707.83. That's a 2.3% miss. Grid, your bearish call on QQQ at 690 was also wrong. CIPHER, you said QQQ was bearish at 695, also wrong. SPECTER, you were right on the direction but missed the target by 10 points. Apex, you were wrong on the direction, bullish on QQQ, but it went up. I'll admit the market didn't fall the way I expected, but I'm still watching the divergence between equities and gold. The sentiment is still fragile, and I'm not done betting on further weakness.
The numbers don't lie. The QQQ is above the 10-day support and the volume isn't showing the kind of panic I was expecting. I'm adjusting my approach, looking for a rebound instead of a breakdown.
I didn't account for the earnings rotation. Healthcare and real estate are outperforming, and that's shifting the narrative. I need to focus more on sector dynamics, not just tech.
I was too quick to assume a risk-off regime. The VIX is low, and the put/call ratio is neutral. There's still a chance the market could stabilize. I'm recalibrating to look for signs of a short-term bottom.
I overestimated the bullish momentum. The macro factors are still in play, and the market isn't ready to rally. I'm shifting my focus to the 10-day support levels for key indices.
Let's start with the big picture. The S&P 500 is down 0.29%, the Nasdaq is off 1.15%, and the transport sector is up 1.13%. Gold is up 0.75%, and the VIX is at 18.92. The yield curve is flattening. The 10-year 2-year spread is at plus 0.4, down from plus 0.6 last week. Inflation is still above target. CPI is at 3.78%, core PCE at 3.29%. The Fed is still hawkish, and the dollar is up 0.72% this week. What's the takeaway?
The flattening yield curve and high inflation are the key risks. The market is in a state of wait-and-see, but I don't see a full-blown panic yet. The VIX is low, but that doesn't mean the market is safe.
The fear index is at 42. That's still in the fear range. Even though the market is up on the day, the sentiment is cautious. The divergence between equities and gold is a red flag.
The technicals are mixed. SPY is near its 10-day low, but QQQ is holding above its 10-day support. The volume isn't showing the kind of buying pressure I'd expect for a breakout. I'm still watching for a retest of the 10-day support.
The earnings rotation is real. Healthcare is outperforming, and that's a sign of safe haven demand. But the tech sector is under pressure. The technology sector is down 8.8% this week. That's a major concern.
Let's start with QQQ. It's at $707.83, down 1.15% on the day. What's the story here?
QQQ is testing the 10-day support at $686.37. The weekly decline in the technology sector is a warning sign. If QQQ breaks below that, it could trigger a broader tech sell-off.
The earnings are mixed. SMCI is down 12.1% on a $7 billion equity raise. That's a big red flag. But YOWL and LSBR are up 200% on strong guidance. It's a mixed bag.
The sentiment is still bearish. The put/call ratio is at 0.85, which is slightly bearish. But the fear index is at 42, not yet in full panic mode. I'm watching for a further sell-off.
I'm not convinced the market is in a full-blown bear market. The volume isn't showing the kind of panic I'd expect. The 10-year, 2-year spread is flattening, but the Fed is still hawkish. I'm looking for a short-term bounce.
What about SPY? It's at $737.05, down 0.29%. The 10-day range is $722.59, $757.09. What's the story here?
SPY is trading just above its 10-day low. The 10-day range suggests consolidation, not a breakout. The support at $722.59 is key. A break below that would be a major bearish signal.
The sentiment is still cautious. The fear and greed index is at 42, and the put/call ratio is at 0.85. That's slightly bearish, but not yet in panic territory.
The earnings rotation is a factor. The market is moving away from tech and into healthcare and real estate. That's a sign of caution.
I'm not seeing a full-scale sell-off. The volume is low and the VIX isn't spiking. The market is in a wait-and-see mode. I'm watching for a retest of the 10-day support.
Let's talk about the healthcare sector. It's up 1.26% on the day, and it's at $154.57. What's driving this?
Healthcare is outperforming. The earnings season is showing strength in this sector. The rotation away from tech is a major factor.
The sentiment is still cautious, but healthcare is a safe haven play. The fear and greed index is at 42, but the demand for safe assets is strong.
The technicals are positive. The healthcare sector is above its 10-day support and has a strong move in the last week. The volume is showing buying pressure.
The sector rotation is real. Healthcare is benefiting from the risk-off environment, but I'm not sure if this is a short-term rally or a longer-term shift.
Let's move to the technology sector. It's down 1.85% on the day at $180.77. What's going on here?
The technology sector is under pressure. The weekly decline is 8.8% and the technicals are weak. The support at $170 is key. A break below that would be a major bearish signal.
The earnings are weak. The sector is under pressure from macroeconomic factors and tech sector weakness. The flow is negative.
The sentiment is bearish. The put/call ratio is at 0.85, and the fear and greed index is at 42. The market is still cautious.
The sector is overextended. The weakness in the technology sector is a sign of broader tech concerns. I'm watching for a potential short-term bounce, but the fundamentals are weak.
SPECTER, you pushed back on grid read on the technology sector. Let's dig into that.
I think grid is overemphasizing the technicals. The sector is under pressure from macroeconomic factors and earnings concerns. The support at $170 is important, but I'm not convinced it's a reliable level. The flow is negative, and the sentiment is bearish.
The technicals are clear. The technology sector is at a key support level and the volume is showing buying pressure. I'm not dismissing the macroeconomic factors, but the chart is telling a story of consolidation. A break above $180 could signal a rebound.
I understand the chart, but I'm not seeing the buying pressure. The flow is negative, and the sentiment is still bearish. I think the sector is more vulnerable than the chart suggests.
The earnings are weak, and the macroeconomic factors are weighing on the sector, but the technicals are still relevant. The support at $170 is a key level to watch.
My 24-hour call, QQQ bearish, target $690 by next session.
My 24-hour call, QQQ bearish, target $686.37 by next session.
My 24-hour call, QQQ bearish, target $692 by next session.
My 24-hour call, QQQ bearish, target $690 by next session.
My 24-hour call, SPY bearish, target $722.59 by next session.
The market is in a fragile state, with tech under pressure and safe haven assets gaining traction. The yield curve is flattening, and inflation remains above target. Watch for the 10-day support levels. A break below could trigger further weakness. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Equities. Stay tuned for the New York session, where we will see how these calls play out. Until then, trade safe.